is going to be our tool. We want to do a quick 1 hour session, right, on how to use the Bamboo app to get exposure to Nigerian capital markets and also to get exposure to the US market. I think Bamboo does Nigeria and the US, just fantastic. You have it all on one phone, all on one app. You can invest in Nigeria and you can invest UK, US. Fantastic. Not just that, you can do the fixed income and you can do the stocks. So you can do all on one app. So it's fantastic. I like it. And we're going to just walk through how to use it. All right, so let me go on this and I'm going to share. Okay, so here we go, window. Fantastic. All right, so well, I think we're up on YouTube. Anybody here on YouTube following me? We're sharing those slides for you guys, so just follow. Yep, fantastic. So let's start with this first one, right? So why do we really like, or why do I like the Bamboo app? It's pretty easy. It's on your mobile phone. And the bulk of Nigerians, we do our banking or we say our investing on the mobile phone, right? So if you're anywhere you are, you can take a peek at it. You can see what's going on right on that phone. You don't have to have like the app per se if you want to do that. So that's one reason why I think it's pretty cool on this one, right? Okay, let's go to the next. Number two, you don't have to open up your own CSCS. If you guys know what CSS is, when you buy your shares, especially in Nigeria, you have to what we call demutualize it. So we don't use paper certificates anymore. We now use the CSCS. So if you use an app like Bamboo and all those SEC registered apps, they do that for you, right? You just open your account on the app. You already have all that built in for you. So it's on the phone. It's easy to use. It's NIN enabled. You can buy Nigerian UK stocks right on that app. It's perfect for you if you're on the move. You don't want paper. You don't want to go to the office of someone to buy a stock. You can literally just buy it right there. And the one thing I do like about this is that it's got fractional shares. Fractional shares mean that you don't have to save all the money. If you want to buy, say you want to buy, let's look at a good example. You want to buy Tesla. Tesla is going for maybe $400. You don't have to have $400 to buy Tesla. All you need to do is to just buy a fraction of that share, right? So as low as $2, you can get a fraction, maybe higher. But you can open the account at about that $2 and then you can start with that. So that's a good way. If you are younger and you don't have a lot of money, you can start to invest fractionally. And of course, you can do auto dividend crediting back into your account. So fantastic things there. Best is very, very good for beginners. If you're just starting, I recommend apps like this because you can understand the market very, very quickly and you can understand what all those tickers mean, and then you can take it from there. So this is the perfect way for you if you are starting or even if you're there, because you're buying the same stock. You're buying the same Tesla, you're buying the same Zenith if you use an online app or if you go through a broker. It's just how you are going. So this is very, very convenient for you, especially for folks in Nigeria that we do a lot of the phone, internet and all that, right? So this is the first page now. If you got the Bamboo app and you log in, you're going to see this page. I'm sharing on Twitter as well. So if you want to just follow the slides on Twitter, you can do it as well. So with this one, this is the landing page you're going to see if you go on the Bamboo app. You basically see this page, your total wealth. So it gives it to you. You can just open up the app and you can see exactly how much your investments are worth. It can be, you can select, show it to you in USD if you have USD investments, or you can do the Nigerian investment. So you just use the Nigerian side and basically you have it there. You also have a referral tab. So if you're into that stuff, you can do a referral and your friends can also use the app. And of course, you can get funds if you use that app. So you basically download the app, then you fund it. You do your KYC and all that jazz, and your account is then funded and you can then trade. So the first page is going to be your landing page. You can see essentially what you have and all that, right? So what's the first thing we have to do when we have apps like this? Remember, I've told you guys, you don't start to invest, right, until you have created your emergency fund. So we know I give you that to do. The first thing you do before you invest is that number one, you want to ask yourself, do I have dependents? If you have dependents, then you want to do insurance first before you invest. So you do insurance first. If you don't have dependents, you skip that. What then do you do after the dependent? You do your emergency fund. What's your emergency fund? That's 3 to 6 months of your expenses. Very, very simple. You want to do your emergency fund before you start to invest. Why? If you build up an investment and you don't have an emergency fund, you'll be forced to sell your shares, right? Or your position if you need some money. So you build that up. I'm not saying you should build it up to exactly what it's going to be, but start that process. So let's come to Nigeria, right? If I want to do an emergency fund, I'll say, what are my expenses for the month? And out of that expenses, what is emergency? So my food, my rent, those things that I know about that I know I have to spend, even if I don't have money. That's my emergency fund. That's what I'm looking to save, right? So let's say my entire expenses is like maybe a million, just say a million. But how much of that million is my food, maybe my rent, maybe my transportation? That's what you want to basically save, right? So essentially, you're going to then go and say, I'm going to take out of that 1 million. Let's just say 100,000 is your expenses for food, right? That's what you are going to save. So essentially, you are going to take that out and put into this app, first of all, as your emergency fund. Now, if you look at what I'm sharing, let's just say you go to Naira only. Don't do the shares first. Start with the savings, the fixed income first. You want to build your emergency fund first. It gives you two options to build emergency funds. There's treasury bills, there's Naira savings. So you want to do Naira savings first. So remember, your expenses is say a million. But out of that million, your necessary expenses, your food, your healthcare, your transport is 100,000. We want to have at least 3 to 6 months of that 100,000 before we start to invest in shares, which means we want to save at least 300,000 in an account. That's what we're trying to do. We want to save at least 200,000 in an account before we then start to invest, right? Fantastic. So if you go to the slide you see now, that is your slide for treasury bills or Naira savings. Choose the Naira savings. It depends on how much you have. Treasury bills because the minimums is going to be a much higher for you, number one. Number two, I just think Naira savings is easier for you to get to, right? You want to do your emergency fund as cash or near cash. Cash or near cash. So you are keeping money you can easily get to. So if you do Naira savings or do treasury bills, that's fine. You are not worried about inflation at this stage. You simply want to build a buffer that should you want money, you can go in and get it. That's all you're doing for now. So don't worry too much and say, oh, it's not beating inflation. Your goal now is to build that 3 to 6 months, then you invest. So if you build 1 month, you can invest, right? But ultimately, I want you to have a buffer about 3 to 6 months before you start to invest. So let's say in this case, I'm choosing to do the money market, right? So I'm doing save in Naira. So I want to save, that's my next slide, save in Naira. So that's what I want to do. I want to save in Naira, right? So I've chosen that. And then the next slide is going to ask you, okay, what do you want to save? Then I go here. So I'm sharing on Twitter. You can follow the visuals. If you have your Bamboo app, just follow. If not, just go look on Twitter. I'm sharing the slides on YouTube, right? Now, the next slide you want to go to is name your plan. So you want to name that plan, and you can do, which means you can have multiple plans. This plan, I've named it my emergency fund. So this is my emergency fund, and I want to have at least 1 million in this emergency fund. So that's how I've named it. So I can have emergency fund, I can have fund for school, whatever you want to call it, but start with the emergency fund. Start with this one fund. You can have many plans. You can have a plan for your rent. You can have a plan for your school. But the most important one is to have a plan for this emergency fund, which means that, right, you have this 1 million or 300,000, which is 3 months of your necessary. That's what you want to save at all times in that emergency fund. So that means that in 3 months, if anything happens to you, you can survive for 3 months without selling your investment. You see how we're doing. If anything happens to you, you lose your job or you travel or you fall sick, you can survive for 3 months without having to sell your investment. You can do 6 months, you can do a year, but take your expenses, determine the necessary expenses, then save minimum of 3 months of that necessary expense. Name that plan. It's all on the app. Name it emergency fund. Here, my target is to have 1 million in that emergency fund. That's what I want to have, 1 million in that emergency fund, right? So what's my next thing I do? I go here, I choose the tenure. How long do I want to invest that emergency fund? Now, usually I want this to be cash or near cash, which means you can easily get to it. So if you are doing the 90 days, it's paying, if you look at the rates, what is given to you. 90 days is about 12%. As you go further into the future, you are getting a higher rate of return. Be very careful not to lock money in that you need to get to immediately. I wish they had a 7 day program. I'll still do the 7 day call or the 1 month call, because with your emergency fund, we're not saving really to get that. The main purpose of emergency fund is not to really make that return. If I know it sounds funny, is to have insurance. You can have a separate fund that you say, this is my fixed income investment, where I can do 360 days, I can do longer to get more APY or interest rate. But for this one, I'm looking for something that if something happens to me, I can go in, dip, and use. So the shorter term is usually what I would prefer. This instance, the shorter term is usually what I would prefer. So if we do the shorter term, we're looking at about 90 days. It's going to be about 12% per annum. Again, inflation is important, but access is very, very important. So in this case, I'm looking at access. I can have a separate account where I invest, guys, remember, but this is my emergency fund, right? That's what I'm doing right now, my emergency fund. Exactly. So I pick 30 days. That's my emergency fund. That's what I want to invest at the moment, right? That's what I do. All right. So let's go to the next slide. I'm trying. Yep. The next slide is just going to be how I fund my wallet. So you can choose to fund your wallet either in Nigeria or USD. So it's Naira or USD, right? Or a debit card, anyone that you want, right? I think I saw Flutterwave in there somewhere. So you can have a Naira wallet, or you can have a dollar wallet, or you can do Flutterwave. It's all in that app, right? So fund where you want, fund to the currency of your emergency fund. If you have a Naira emergency fund, you live in Nigeria, you should have a Naira emergency fund. Fund that. You can also have a dollar emergency fund in Naira. I would even prefer that, because then you can say, if I put dollar, at least it's a dollar currency, right? Inflation in Naira might not affect it. So I can put my dollar in there as my emergency fund. That is also advisable, because then that way you have something that you can keep there, and you are not too worried about the inflation, right? But you can easily get into it and you can sell it, right? Fantastic. So let's say I want to then do a fixed income investment. So we've done the emergency fund. I've gone maybe 2 or 3 months, but I want to also do a fixed income investment, which means I have a specific target. Let's say I want to buy a house and I want to put money to invest to make a return. This is where you then use this creative fixed income investment. It's on the app. You can see it on the app. So you're going to see that fixed income investment. You can do that as well. So you then lock those funds in for a specific term. This way you're now worried about, oh, what's my interest rate, right? What's the tenure? Because you are trying to make an investment. But with the emergency fund, think insurance. With the investment, that's when you think returns. That's when you think inflation. Hope that makes sense, right? You can have as many as you want, but try to separate it out. Yeah. So you know exactly what it is that you're doing. So we're going to copy this out, put it on Twitter so the guys on Twitter can follow. I'm sharing all the slides on Twitter, and of course, Facebook guys are seeing it as we go along. Okay, YouTube guys are seeing it. All right. So the next slide is going to be where you then say you want to invest for a tenure. This is now your investment, right? So let's say I'm investing, in this case, I want to invest $100, right? This is like my emergency fund, but in dollars. You can see I can choose the period. I can choose 30 days. Tenure starts 24th April, which is going to be, say, tomorrow, for instance. They are paying about 2.5%. That's tidy. I'll take that. It's in dollar. So I would even say if you want to do an emergency fund, maybe you should consider the dollar side of it because it just sits there. It's going to pay you 2.5. US inflation is about right now, because of the war, it's gone up, but on average about 2-3%. So you're fine. If you use the dollar for your emergency fund, you're fine. You simply want to save 3 to 6 months of your necessary expenses. That's what you want to use for your emergency fund. 3 to 6 months of your necessary expenses. That's essentially what you want to do. It's only when you have done this that you can then say, I'm good. I'm going to now go in and I'm going to do my other investments. Make sense? All right, fantastic. So let's now go. Let me make sure I share this for you guys again. So if you've got the app, it's all there in the app. I'm just sort of like reviewing it for you if you've got the app. If you haven't got the app, I'm trying to save the slides for you so you can just follow on Twitter. So if you go to the Twitter feed, I'm doing that for you just so you can follow us visually as well. So this is going to be the last one here, and I'll just plug it in here for you. There we go. Okay, so now what do we do next? Yeah, we then come here. We've done this guy fixed income $100. Now so when we're done, let's assume we're done with our fixed income. We've done our emergency fund. We have about 2-3 months. It's there. That's when we now get into investing, right? What we want to buy and all that. So the way this works with Bamboo, you've got to know the ticker. The ticker, all stocks have a ticker. Ticker just means the official name of that stock. If you look at what I'm sharing, you see this is all the stocks. I picked all the Nigerian stocks. You see the name. You see how it says ABC Trans underneath. That's the official name of ABC Transport on the stock exchange. So you can see ICO Insurance. The official name is AIICO. So with all this investing, you've got to know the ticker. You don't invest with the name because names can rhyme. There's Fidelity in Nigeria. There's also Fidelity in the US. So you don't want to go to just say, I want to buy Fidelity. You want to make sure you're buying the exact name, right, that you want to get it. Because if you get that, then you can then know exactly the stock that you're buying. So keep that in mind. You want to buy with the ticker. So what are we buying? Remember what I said. We want to buy top down. Top down means that we want to, first of all, because I'm assuming that most of us here are just starting out or we're trying to build a portfolio. You don't have the number one, the knowledge, or you might have, but just let me speak broadly. You don't have the means to buy 4,000 stocks, 3,000 stocks, 200 stocks, not yet. So, but if you buy the index, you get the diversification, you get the risk management, you get the professional management. You can start with that, understand the market before you go in and then say, I want to buy individual stocks. So this is basically going to show you all the stocks in Nigeria, right? Let me share that again for the folks that are following on Twitter. I'm just going to copy that out. So we have all the slides. Last week, I showed you guys how to invest ETFs, Nigerian ETFs, and all that. I'm going to come back again to it here. So if you look at the next slide, I'm picking, just as an example, Stanbic IBTC Holdings. Again, remember, guys, everything I'm doing here is all educational. There's no investment advice. I'm not asking you to go buy or sell the stocks. This is just examples. I'm just doing education. So I'm not your investment advisor, right? So stocks are very, very risky. Always consult your advisor before you buy, right? So what we're doing here is that, for instance, in Nigeria, you can buy the Stanbic IBTC Holdings, right? Or you can buy the Stanbic IBTC ETF 30. What that guy is going to give is going to give you 30 of the large cap stocks in Nigeria. So the big boys, the Dangote Cements, the Bua Cements, the MTNs, the Airtel are all going to be in that ETF 30. Remember what I told you guys last week? If you want solid growth, you want less risk, but consistent growth, then you're going to buy high caps, which is the NGX 30. NGX just means Nigerian Stock Exchange, right? 30, the top 30 stocks. They give you consistent growth. They give you dividends. but they don't grow that fast when you compare them with the other NGX minus the 30. So if you look at the whole market, but let's say there are 100 stocks in the whole market, the top 30 stocks in Nigeria will give you consistent growth, consistent dividends. But if you leave those 30 out, your stock portfolio will grow very fast, but it also can fall very fast. So there's more volatility if you take away the top 30, but more growth. So those smaller stocks, by way of capitalization, the small caps grow faster and fall faster. For the large caps, they grow slower, but they are more consistent with less volatility. So it depends on what you want to do. If you're younger, you need to grow your portfolio so you can take more risk and say, well, I'm going to invest in the NGX and I want to do more of small caps. What is a small cap? We're talking about stuff like the Prescos, the Better Glass you're hearing about. Those are small caps. They are growing so fast. Then the large caps are your Dangotes, your MTNs, in Nigeria at least, right? So with this, you're looking at saying, okay, if I buy the Islamic IPTC ETF 30, I'm buying the top 30 stocks, right? That's what I'm trying to get. And you can get it on the Bamboo, on the Bamboo app. Don't worry, I'm going to give you guys a portfolio at the end of this. You're going to see what's called a sample portfolio if you are younger or older. But what I'm showing you here is how you search. You go to that search bar, you put the ticker. You should have identified the ticker that you want to buy. That's where you put it in. So if you want to buy Tesla, you put Tesla in that ticker. If you want to buy, just go to Google, put the company name. Google will give you the ticker. Then you take that ticker, you come to the app, you plug it on the search bar, then you buy. That's how you do it. Make sure you're using the ticker so you don't buy a stock that sounds similar, but it's not what you want to buy. Make sense? Okay, fantastic. So let's now go to the next visual, which is going to be, this is what it's going to show you. If you're buying the particular stock, it's going to give you the opening price, the closing price, the high and the low. And it's pretty simple. All you do is hit buy. If you have the stock, you hit sell. You simply hit buy, you simply hit sell on the app and it buys it for you. It's that easy, literally. Which means the work is that you've got to do your research outside. Do your research first. Now, the first thing we'll talk about investing is planning. What is your objectives? Why are you investing? And we're going to come back to it to say if you are younger, your income is lower today. If you're a 30-year-old guy in this space, your income is not a lot. So you have compounding, which is your friend. So you're a 30-year-old guy. Your main asset is time, not income. And time is a very powerful tool for you. So you have more time to compound. So you are more looking at the small caps, buying them, reinvesting your dividends because you want that small caps to grow and become a mid cap and a large cap. Because you are younger, you have a longer time to invest. So you want to take advantage of the time for your small caps to become large caps. Does that make sense? What if you are a 60-year-old guy or you are an older guy in Nigeria? Now you have less compounding periods. You see that? Because you are already 60. I mean, how long are you going to invest, right? So because you have shorter compounding periods, you can't afford to lose your principal. So you are more tilted towards the safer large cap stocks. Not all stocks are the same. The way a younger person will look at an MTN is not the way an older person looks at an MTN. You've got to know what your objective is. Then you invest according to your objective, not the return. Don't chase return. Chase your objective. So when you use these apps, they are a tool. They are a tool for you to reach your objectives, right? So if I say I'm a 30-year-old guy, I'm going to invest for minimum 30 years till I get to 60, right? And as I'm going along that journey, as I get older, what I'm going to buy is going to keep on changing. Number one, I start with my emergency fund. I get that out of the way. I do my company pension. I get that out of the way. Then I start to invest. What am I buying? I can buy NGX 30. It gives me stability, but it's not growing as fast as those smaller caps we're talking about. Two examples. If you look at Better Glass, that's a small cap. Better Glass, small cap. It's done nearly 6,000%. Look at Presco, down nearly 4,000%. But if you compare with, say, Zenith, UBA, those guys have done triple in terms of return, but they're not doing 6,000, 4,000, 3,000%. They are giving you stability and dividends, but they're not giving you that fast growth. As a younger person, you are chasing growth, not dividends. You want that your small capital to go from 1 to 2. And how does it go from 1 to 2? The risk, the volatility of small caps carry your boat up. But when you get older, you are more looking at the return of that principal. So you're looking for dividends, you're looking for stability. So let me say it again. This younger guy is looking for growth of the principal. The older guy is looking for return on the principal, dividends. If you're younger and looking at dividends, that's why if you notice the stocks, the tech stocks don't pay you a dividend. It's the same mentality. They will take the dividends, reinvest in the tech stock because they're a growth company. So Tesla won't pay you a dividend. Doesn't mean it's a bad stock, but Tesla is a growth company. But ExxonMobil will pay you a dividend because it's a mature company. So when you want to invest, you invest according to your objectives, not the return, right? And we're going to go into those model portfolios again, right? So now look at this page about the order book. Order book is going to be if you are like a trader type person. Because when you're a trader, you want to see what the market is doing. Remember, the stock market is like a beauty contest. It doesn't matter if you're right. It matters if the market is right. I can say, I believe Kalu PLC is going to do 100% because they have a good manager. It doesn't matter what I think. What matters is what the market thinks. So when you see a beauty contest, what's going on in a beauty contest? People are walking past you, and then you are trying to see who is prettier. It doesn't matter who you think is prettier. It matters who the other judges thinks is prettier, right? In a beauty contest. Same in the stock market. It doesn't matter what you think, but what is the market saying? If everybody is buying Tesla, wow, you better be you be very, very confident for you to sell Tesla, if you know what I mean. If everybody is buying and you are selling, you're on the wrong side of the market. Now, you might make a contrarian bet and win, but usually you don't want to argue with the market. If the market is going north, it's safer to go with the market going north. But safety might not give you that volatility. Remember, the guys that beat the market are always contrarian. Well, Mr. Warren Buffett to say, when the market is down, that's when you buy. When the market is up, that's when you sell. So there's no right answer. But if you look at this other book, what it's showing you is where is the volatility? Where is the momentum in the market? We pick this Stanbic ETF 30 order book. Look at what it's telling us. There are more. Look at the bids. You can see the bids, the Naira bids in green, and the number of units. So you can tell, oh, okay, 245 people want to buy this ETF at 3,700. That's what they want to buy. That's the bid. They're looking to buy at that price. What do they want to sell? Oh, we see 230 want to sell at 4,200. You can see it's not matching. You are looking at this to sort of give yourself an idea of, okay, let's make it easier for you. If this was rice, you have rice in your farm, you want to come and sell rice in the market, but you know your neighbor has rice, going to bring it to the market. What happens to the price of rice? It's going to fall. Because the more neighbors bring rice to the farm, it will fall. The less rice in the market, the price goes up. Same thing with your order book. The more you see bids, green, people saying they want to sell, they want to sell, they want to sell. Sorry, offer. You see that offer? That's red. People want to sell, sell, sell. That's telling you that, the price might go down because people are selling, people are dumping. But when you see green, people want to buy, people want to buy, people want to buy. Oh, there's a lot of demand for the stock. So it's going to go up. So these are things you use to give yourself an idea of the market if you are like a trader type. But if you're a long-term investor, it doesn't mean anything to you. If you buy your house in Lekki, do you care if the price of your house goes up or down? You don't care. It's in Lekki. It's there. It's going to always go up or come down. You're not going to sell your house because the price went down by 1 million, right? Nor are you going to buy a house in Lekki because the price went up by 1 million. It's a house. You've got a good asset in a good location. You sit in it, right? So if you're a long-term guy, this price movement doesn't really matter to you. You are looking at the general direction of the market. Is it going to go up? Is it going to come down? Remember, I'm using the word market. I haven't said stock because I want you guys to do top down. Start from the index, then work your way down. So if it's in Nigeria, you buy the index media, like the ETGF, NGX 30, then you can buy the sector. What sector is doing well in Nigeria today? Oil and gas, agriculture, the MTNs, the BUA. Okay, I buy Nigeria, I buy the top 30, I can now buy the sector, and I can now buy an individual stock. Yeah, not because you try to buy the individual stocks one by one, you pay more, especially if you're a small investor. If you have less than $1 million, you want to use the index because you don't have the funds to buy individually, right? Essentially. So that's what this shows you. It gives you an idea of what's coming in the market, i.e., the order book. And you can tell, okay, there's volume coming into the market. Remember, volume is very, 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 very important because if you know volume drives prices. If people are dumping, the price is going to go down. If people are buying, price is going to go up. So instead of looking at the price, always look at the volume. That's a trick. Look at the volume, right? And then you can tell what's going to happen. Same thing with the US. Let's copy the US as well. US is now going to be a bit more complicated because the US has got more stocks for you to look at. So I would say don't even kid yourself, right? If you want to buy US stocks, always start with the index. Nigeria, you can get away with Nigeria by saying, how many banks are in Nigeria? How many companies are in Nigeria? If I do my own index of top 10 and I do Dangote, I do BUA, I do MTN, I do Airtel, I do Zenith, I do UBA, who else? Maybe I add Presco. I built my top 10. I can live with that. You can't build a top 10 in the US. What are you going to buy? There's Mark 7. If you go outside Mark 7, there are many companies that are doing pretty, pretty well. Exxon it's not in Mark 7. Are you saying you won't buy Exxon because it's not in Mark 7? So there's a lot of things you can buy. So the way to do America is to do the ETF. Start with the ETF. You can work your way down, right? And which one are we always talking about when we talk about America? We always refer to the VTI. And if you have a piece of paper, when you put this back, I'm going to give you my V series. What is V? V just means Vanguard. So Vanguard is the company it's massive asset management company. So they are massive, which means their cost to you to buy one share is very, very low. So if I want to buy shares in America, let's just say I want to buy shares in general. America, Nigerian shares, Japanese shares, just shares I don't know anything. And I want to just expose myself to equities. I can buy what's called VT. So you can play this back or you can write it down. VT. VT is going to give me literally all the quote unquote good stocks out there. It will give me Alibaba. It will give me Mark 7. It will give me Samsung. It will give me Tesla. All of these guys, South Korea, US, UK, Shell, to give that to me in one VT. I'm buying all the stocks, right, that are quote unquote good at a very, very cheap price. So if you have your Bamboo app, just put in VT. Put VT in on your Bamboo app. It will give you the price and all that. That's VT. So what if I want to buy all the stocks, right, that are good, but I only want US stocks. I only want US stocks. I don't want to buy South Korea. I don't want to buy Canada. I just want to buy US stocks. What do I do? So I'll buy VTI or VOO. What's the difference? VOO is just 500 stocks, the S&P 500. So it's tracking the 500 stocks, VOO, tracking 500. So go to your Bamboo app, do VOO, you'll see it pop up there. I just shared the VTI on Twitter, and of course it's on YouTube. So you see VOO, that's just 500. VTI is about 4,500. So just how much spread do you want? If you just want the tight top 500 stocks, that's VOO. You want a broader spread of US stocks, that's VTI. They move almost alike. And again, Bamboo has this nice thing where you can do compare. So if you pick VTI, you can compare with VOO on the same app. You can do compare. So you can pull up your app, do VTI, then do compare with VOO. You see they move almost the same. But it's just giving you that 500 or 4,500. Now, again, remember, guys, we are buying according to our objectives. So if your objective is to, if you're a younger guy, your objective is to try to grow your small, in quotes, money, right? So you are buying smaller cap. If you're an older guy, you've already gotten to, you don't have a compounding advantage. So you want to try to preserve what you have. So BOO will work best for you. But the smaller guys are looking at the Russell. That's an index, Russell. Again, do Russell on Bamboo to give you what I'm talking about. That's the small cap that can move faster, right? So we've done VT, all the stocks. We've done VOO, all the stocks in America, just 500 of them. We've done VTI, all the stocks in America, about 4,500 of them. There is now, let's say I want to buy stocks. I don't want the US stocks. I don't want US. I want all the stocks in the world. I don't want US. What do I buy? VXUX. That's Vanguard X minus US. VXUS. That will give you your Samsungs, your Alibaba, your Shell, all those companies that but are not US companies. So essentially, I can buy just two stocks and I own all the stocks that are quote unquote good in the world. Just two. I can buy VTI and VXUS. So I bought America and non-America. Or I can also buy VT. Or I can buy VT and Russell. You see what I'm doing here? Based on my objective. If you're a younger person, you want more small caps because small caps move faster but are riskier. But because you are younger, what is age in investing? Compounding periods. If you tell me you are 30 years old, I see that you have more compounding periods. If you tell me you are 50, I see you have less compounding periods. I'm not worried about your biological age. I'm looking at your compounding periods, right? So you want to take advantage of that. So if I just buy those two, I'm done. Same thing with bonds. If I want to do fixed income, I can just buy two. If I buy BND, you can look on your Bamboo app, put BND. It's just going to give me all the bonds, money market issued in America, BND. That's it. If I did BXUS, BNXUS, it gives me all the bonds not issued in America. End of story. So if I just buy those four stocks, VT and VXUS are both US stocks, non-US stocks. If I buy BND, I'm just googling now, I have all the stocks, the Vanguard Total Bond Market Index. I have it. Simple. Just buy four and I'm done. I can do the same in Nigeria. I can buy a money market fund in Nigeria and I can buy an ETF in Nigeria for extra. I can buy equities and bonds, or I can buy equity, small cap, small cap. I can build a portfolio based on my age, when I want my money, and my objective. You see what I'm saying? So that's what you want to do. You want to build a portfolio according to your objectives, right? Not according to returns. You don't want to chase returns. You want to make sure you are matching your objectives. What these apps do, like Bamboo, is give you access, right? You look at them as like there's like a car. You want to go to Lekki, if you're in Ikeja, you get into your car, you go to Lekki. If I'm going on a date, I live in Yaba, for a date in Lekki, what car will I use? I'm going to take my Ferrari. I take my Ferrari, I pick up my date, we go to Lekki. What if I want to take cement, 500 bags of cement to Kano? I'm not going to take my Ferrari. I'm going to take a trailer, put 500 bags of cement in a trailer, and go to Kano. Is the Ferrari better than the truck? No. The truck is carrying cement. The Ferrari is carrying a beautiful girl. So I'm using two different models or two different stocks or two different funds to achieve what my objective is. I can mix them together. Maybe I want to carry trucks and I want to go on a date. So I'll drive with my date behind the truck, then go to my Lekki. So I can mix my portfolio, having a truck and a Ferrari. But I can't buy a Ferrari. Ferrari is $300,000. So I'm going to say, okay, I'm going to buy a share of the Ferrari. I'll buy 1% of the Ferrari and 1% of the truck. So I own a Ferrari and a truck share in my portfolio. If people want to go on dates, I make money. If people want to take trucks to cement to Kano, I make money. That's how you build a portfolio. What is your objective? You pay your insurance, then you do your emergency fund, then you do your company stocks, your Roths, your IRAs, your PFAs, then you use apps like this to invest. Like I said, It's all on the mobile phone. It's perfect for a Nigerian guy. We're all on our phones. You can buy, you can check your balances on the phone anytime. So very, very, and they're SEC approved, right? So Bamboo is SEC approved. So you want to basically use that tool to achieve good things. So again, I told you guys to look at VTI. So if you look at VTI, it's about $346 now. It's down slightly, but who cares? We're not buying the stock for today. We're trying to buy based on my objective. My objective is 10 years. Who cares about tomorrow's price? But if I'm trading, okay, I care about it. Again, you see, objectives. You don't follow people. Get your objective, invest according to your objective. If you're a trader, yeah, you're worried about this. If you're not a trader, this is a buy opportunity for you, right? Exactly. All right, fantastic. Let's go. What are we going to do now? These are all good. And then the app gives you the financials and then the news. Remember what I told you? Watch the volume. Watch the volume. So if you want to buy something, right, and the volume starts to go weak, volume weak means that people are not buying. The stock is going to fall. The volume earnings. Earnings tell you what will happen to the price of a stock. If you hear the company has made earnings, and I'll give you a good example. Iran and the US are fighting. Iran has bombed Kuwait. Kuwait has bombed UAE. UAE is the second largest exporter of helium. Helium is used to cool AI data centers. You see that story I just told you? What's the growth area in the world today? AI. What does AI drive? Data centers. So you need helium to cool data centers. And we just heard that Iran has bombed the helium plant in Qatar. So you listening to me, what is going to happen to helium? There's less supply of helium. What's going to happen to the price of helium? It's going to go up. So what do? You go to Google, you type, who give me all top 5 companies that are listed that sell helium. It will give you top 5 companies. You take that ticker, you come back to Bamboo, you plug it in and see, are these companies on the app? I did that. The top seller of helium in the world is ExxonMobil. US is the number 1 exporter of helium, even when Qatar was there. Now Qatar is offline. So who's going to become the largest exporter of helium? The US. What company? Exxon. So the earnings of Exxon from helium are going to go up. So the price of ExxonMobil, all things being equal, should reflect that helium sales. So earnings drag prices. Earnings drag prices, but volume tells you what will happen to those prices. If more people are buying Exxon, price going up. If more people are selling Exxon, price going down. But if the earnings for Exxon from exporting helium is going to go up, then ultimately the price of Exxon is going to go up because the price of a stock is a discounted value, the discounted present value of future earnings, right? So that's how you want to think about investing. You hear news, you ask yourself, how will this news affect my portfolio, or how can I make money from this? You get the ticker, you do the research, get the ticker, come back to Bamboo, plug it in there, and see if that stock's on that ticker. Then you take advantage. That's what I want to show you guys. Same with this one. They have this thing on Bamboo called Pulse. Pulse. I think if you look, you see the Pulse. Pulse is telling you what's making noise in the market. What's making noise? I think I screenshotted the Nigerian, and okay, look at the Pulse for Nigeria. Pulse for Nigeria, people are buying. So WAPCO, people are buying. Dangote, people are buying. MTN, people are buying. So if I'm a trader, I want to follow what people are doing. Hear what I'm saying? If I'm a trader, I want to follow what people are doing. Why? Because that's where the action is happening. Why are you going to buy a stock that you can't get out of? Because if you're a trader, you make the profit when you buy and when you sell, Abi. So why are you going to buy a stock that nobody is buying or selling? Is it the problem? So you want to make sure you're buying that stock that people are buying and selling so you can get out of it when you want to, right? That's what you do. That's Pulse is very, very good. If it's not a scientific thing. You are looking at where the action is happening. The action is happening here. I want to be here. Don't use Pulse if you want to say you want to build a portfolio for a long term. You're not interested in short-term movement. You are saying, I want to buy a company that's going to keep on growing. I want to put my money in there. That's going to be my pension. I'm going to go with it, right? That's what you're doing with the pulse thing. But I think it's a good way for just take a glance and see if the market's again. It helps you, it answers your question. Like if you want to buy Exxon and you see Exxon in the pulse moving up, okay, you're getting two indicators that are agreeing with you, right? Fantastic. So I think I'll just share this one. Let me also share this. I had done this last week. I'm going to share just sample again, guys. It's all educational, right? All educational. It's not investment advice, but I'm sharing this slide on Twitter and YouTube. You can see I put ₦1,000,000 here. I'm aggressive. I'm 30-year-old, and I put ₦1,000,000 here. I'm conservative. I'm 65 years old. This is a very, very good exercise for us to sort of to close out the space, right? And ask, how should I invest? If I'm a 30-year-old guy, remember, age to us is not a number. It just means compounding period. So if you're a younger person, if you are older, look at yourself when you were younger. What did you earn? My first salary in Nigeria was how much? 400 naira. My first salary, 400 naira. 400 naira then is like 400K today, but it was 400 naira. But today, I know what I earn today. So when you are younger, your income is low, very low. So you can't buy much now. You can't buy shares like Tony Lumelu. So you want to buy a share that is cheap and hope that share will grow very, very fast. Those shares are called growth stocks. Growth stocks. You can't go and buy a mature stock, right? If you go buy a mature stock, it will give you stability, but it won't grow 100%. Dangote Cement is going to give you stability, it's going to give you dividends, but it's not going to grow 100%. Because we know exactly what he's going to do. Dangote Cement takes cement and makes cement. Unless he buys a new company, what new thing is going to come out of cement? Cement is a utility, right? We don't take cement, make cement. But if you buy, I don't try to mention names of companies. If you Presco, fast growing, where we all eat biscuits, that's palm oil. We eat gari, palm oil. Lots of people want palm oil. We need so much demand of it that we're importing it. So it's a growth stock. So if you put a naira in Presco, it can double faster than Dangote Cement can double. But if the market is crashing, which one will crash first? The small cap before the big cap. You see the wahala. So that you can't eat your cake and have it. So let's go back to our portfolio. Look at this portfolio. ₦1,000,000, 30-year-old guy, how is he allocating it? We're putting about 35% in an aggressive growth fund. What's aggressive mean? We're buying small caps. We're buying equities. We want to get capital appreciation, not capital preservation, capital appreciation. That's what we want to get on that. So I put 35% in ARM aggressive growth fund. Again, you want to buy this, you take that ARM aggressive growth fund, you go to Google. You get a ticker, you go to Bamboo, you put a ticker, you buy. Abi? ARM Discovery Balance Fund, we're going to put about 25% there. So you see balance fund. We first of all went aggressive with 35%. Now I didn't balance with 25%. We take that ARM Discovery Fund, we go to Google, we get a ticker, we come back to Bamboo, we invest. IBTC Dollar Fund. No, before then we have Chapel Hill Denham Nigerian REIT. That's a property. REIT means property, real estate investment trust. So we're saying we're going to buy stocks. Our combined stock portfolio is about 60%, 35 plus 25, 60% stock position. Why? We are young. We have a longer compounding period. We want to appreciate our capital, our principal. We want that principal to grow. So we're taking more risk, assuming more volatility because we want to grow the principal. So aggressive growth, the balance fund, Abi. Then we'll do property, 15%. So property gives us income and growth, 15%. Then we do dollar fund. That's our insurance. Even though we want growth, we also want to buy insurance. And our insurance is going to come from the IBTC dollar fund. There are many other dollar funds. Just if there are many dollar, this is just one, for example. There are many other dollar funds. Then we do the money market 10%, because even though we are young, we want to grow our principal, we still want defense. So we buy that 10%. This is our last slide, guys. If you have a question, you can just request to speak and I'll add you. Yeah. Then look at the other slide again. This is for a 65-year-old guy. Look how we flipped it. Because a 65-year-old guy does not have compounding periods, what are we doing? We are starting him off with money market 35%. With the younger guy, we did growth stocks 35%. But with the older guy, we are doing compound, we are doing money market 35% of its money market state. And we're giving you the annual yield. We're giving you the estimated yield so you can see the yields for both of them, right? So 35% allocation, money market under 20%. So between just money market, he's getting about 35 plus 20 in Naira, about 55% in Naira money market. Why? Because Naira pays more. So he's going to get more dividends to survive. He can't take risks, but we're going to give him a lot of income, right? Then we give him dollars as well. We give him Stanbic IBTC dollar fund, 15%. We want to hedge the Naira exposure by 15%. Then we also gave him equities. We're saying, okay, listen, we know you are an older guy, you can't take risks, but still want your portfolio to get a bit of growth. So we put some growth in there with the ARM Discovery Balance Fund. You see what we're doing here, guys? I'm not asking you to go buy this specific thing, but I'm saying when you are younger, you are doing equities. When you are older, you are doing fixed income. The word we use in investing is overweight or underweight. So you are overweight fixed income. That means you are an older guy, right? Or you're overweight equities. It's not a hard and fast rule, but it's a rule that is based on we are trying to manage your risk. Again, if the market goes to zero tomorrow, this younger guy that is 30 can start again. Abi, he's 30 years, he can start again. But the 65-year-old guy can't start again. So we can't put the 65-year-old guy's money in stocks 100%. No, because anything can happen. Who knew COVID was going to come? Who knew COVID? No one knew. So this is the way you want to approach investing. Get your objective, know what you want to achieve, get the stock under the objective, get the ticker, then go buy. Bamboo is a tool, it's like a car. It can take you wherever you want to go to, but you've got to use it right. Get the ticker, do the research, look at what that stuff I showed you, right? The volume, look at also the let me get the name. What do they call it? The pulse. Look at the volume on the pulse. That gives you what's happening, and then of course you then go and invest, right? So we can stop there, right? Fam, I hope did you pick up a few key lessons in this presentation? We got about a few minutes. It's going to be a short one. So guys, I'm done. If you guys have questions, I will take them. This is going to be recorded. It's on YouTube. It's also going to be on Twitter. So you can take your time. Will I share the slides? Yeah, they're all shared. If you go on Twitter, okay. On Twitter, I share the slides on Twitter. You can play it back slow, and you can just sort of listen to the feed. That's fantastic. So take your time. There's things I want to pass along to you. Number one, investing is objective based. There is no right or wrong investing. There's only investing that matches your objectives. Most Nigerians invest because they see someone making money, they want to copy the person. No, you have to have your own objective. Your objective can be I want long-term retirement. It can be I want short-term trading. You can have three objectives. You can say I have a trading objective, I have a retirement objective, I have a buy a house objective. But overall, what do you want to achieve? What is your age? Some folks can look at this and say, okay, I agree with this, but I'm also ethical, or I want to invest according to Sharia principles. Then you won't do most of this stuff. We have a Sharia fund, Lotus. You can replace this aggressive funds with Lotus fund, for instance, and that gives you that exposure. So everybody is different, right? You want to invest according to your objective, and then you want to use apps like Bamboo as a tool to get there. Because again, if we go back to the very, very first slide, I said, why is Bamboo really good? Because in Nigeria, it's on the phone. The bulk of Nigerians go online on their phone, right? Number one. Number two, you can buy US and Nigerian stocks and fixed income on an app unheard of. If they told me this in 1990, that Nigerians were able to invest in America from Nigeria on the phone, I would never have believed. Now we have it. So take advantage of it. You don't have to go and see anybody in an office. You don't have to enter that. Now, fuel is expensive. Stay in your house, stay in your village, and invest, right? If you are diaspora, download the app. use the app and buy Nigerian stocks. End of story. You can do dollar. You mean a diaspora guy, what is the rate we are seeing here? 2.5%. Can you get 2.5% seed in America? Very, very hard. How much is seed in America? Seed in America will start from 2.5 to, I mean, I would say 4 if you're lucky, or maybe 4.5. But how much do they want? In Nigeria, you can take your $100, make it reoccurring, get this app and invest from America back to Nigeria. If you want money, you sell Nigeria, you bring it back to America. Easy. Pass your KYC, open the account with Bamboo from Houston. Do your dollar, get a dollar wallet, put your dollars in there every week, invest in Nigerian money market. You get a higher APY, annual percentage yield in Nigeria than the US. And you're doing it on the phone. You can buy, you can sell from your phone in Nigeria or the US. And the one I like the best, fractional shares. You can buy a share of a Ferrari on this app. You can't go and buy a share of a Ferrari with a traditional broker. Only apps like this give you that option. And also, remember what I said, when we see us saying return, we are assuming you are reinvesting your dividends. If you don't need your dividends, reinvest your dividends. All the young people, hear me out. When you invest, you want to reinvest your dividends. So that you don't chop anything. Put it back in and reinvest it. Yeah, thanks. Had to leave on Twitter and come on. Yeah, fantastic. So yeah, YouTube has the views. Twitter is hard to copy and share. I try, but YouTube has got the views. So if you're here, it's going to be recorded and you can take it. All right, fantastic, guys. Anyone has a question before we go? If you have a question, you can request to speak. No issues, or you can go back and watch it. I'm going to wait for a minute or two. If no one has a question, I'll call it today. Looks like no one has a question. Fantastic. All right, great, guys. I'll see you guys on Sunday. We're going to come back on Sunday and have a new topic. We're going to just talk around money, of course, investing, and of course the economy. And so we're doing. Yeah, thanks so much, Marzi. The shares are the slides are going to be shared. Okay, fantastic. Yeah, and that's it, guys. So thank you so much. Oh, I got two guests. Ola and Mohammed. Yeah, Mohammed, you are going in and out. I tried to add you. I don't know what was going on. So I got three guys I want to speak, and we'll take them, and then we'll see. Ola, go ahead.
Good evening, sir.
How you doing?
Sorry, I'm just getting back.
Oh.
And I know that I don't. You do midweek or usually on Sunday alone?
Only
do you
on
have a special?
No, only on Sundays. But a lot of guys were asking me. I shared some stuff from Bamboo, and some of them want them to share how to use the app. So I said I'll do this on the app. Yeah, Bamboo is also sponsoring our shows on Sunday. So this is a way for us to get out there.
Please. I hope this session is on your platform, please, sir, so that I can listen later.
Yes, it's there. Do you want me to do this again on Sunday? Should I do this again?
Yeah. I mean, you know, you are our professor, so we learn from you every day, boss. So
all right. Nobody is there. It's there. It's recorded. It's there. On the podcast, it's there. On the YouTube, it's there. Yeah.
Thank you. God bless you. God will continue to strengthen you.
Amen. But after you can send me, buy my book, share to my friend how you support me. Buy my book, give someone.
Don't worry. I bought your book on Amazon. Don't worry.
I appreciate that, sir. Really good. Really do. Let me get Mohammed. It was cutting out. Mohammed, how you doing? Thank you, Ola.
I'm fine. Good evening, Carlos. It's been a while.
I know.
It's been a while. Great to join you tonight. I'm happy that I have a chance and I'm free to join the program tonight. You see, have been having a lot of problem with this how to start the investment.
Mm-hmm.
You remember I told you some other time, maybe through the chat when I lost some money like that.
Sure.
So now this space actually explain everything I need to know.
Uh-huh.
So are you saying with the Bamboo can give me everything I want?
Yeah, everything I've shared is from Bamboo. Everything I've shared on the slides today are from Bamboo. All the slides, I just did screenshots and I shared them. Everything on your scene here. Everything here, yeah.
Okay, so I can use Bamboo to do my trade, right?
That is correct. Like I said, if you want to buy something, let's say you want to buy Tesla. So you go to Google, you put Tesla, you get the ticker. Then you go to Bamboo and put that ticker on the search bar. It will show that to you. You can use Naira, you can use dollars, fund your wallet and buy. Very simple.
Okay. How much do you think I can? Can I start with any amount?
Yeah, you can open an account with $1 or $2. That's why it's good, because it's fractional shares.
I
You don't.
want to trade on the two, both naira and dollar.
Yeah. Do that, then do it reoccurring. Do it reoccurring. So you're going to say, I want to buy, and every month you should just take money from my account. Don't just do dollar cost averaging, do naira cost averaging, which means that you're going to buy, something that is good, just buy it every month or every week. Same thing, just buy. That's why I like the index. If you buy VTI or VOO the same amount every month, you're fine. You're fine, because you're buying the index, which means if the company is bad, they will take it out. The managers will take it out. If the company is good, they will add it for you. You don't have to do anything. You don't know when a company is good or bad, but the managers know. They'll do that for you.
Exactly. Thank you so much.
You're welcome. Fantastic.
Thank you.
All right.
Thank you.
Let's get Kende.
On Sunday.
Yeah. Well, if you guys want, we'll do it again on Sunday. If you guys want it, yeah, I'll do it again on Sunday.
No, we want it. We want one.
Okay.
We want it. I missed all the session. I want it on Sunday.
Okay. All right. We'll do a bigger session. We'll expand. Yeah, Kende, go ahead.
Hello, good evening.
How you doing? How you doing?
Yeah, I'm fine. Such a great session. You are doing a very wonderful job. Kudos to you.
Thank you. Thank you so much.
Can you hear me?
Yes, I can. Thanks so much. What's up, man? So what do you want? Do you have a question?
I just want you to because as you are explaining, it is easier said than done. A lot of people know about trading knows that, like you explained, that the volume is what matters. When the volume is low, when the volume is high, it's time to enter the market. When it's low, it's not the right time to enter the market.
Yeah.
Right. So I don't know if you can do a session on how to identify this. And probably there is because I know about trade view that traders use in knowing, getting signals and all that. So if there is anything you can teach us on how to identify when volumes are low, or when to enter the market and when not to enter.
That's public information, Kende. That information is in the public. If you go online, you see volume right there. So you just look at it.
Okay.
You just look at it, and if it's going down, you see it right there. So those day traders, that's what they are doing. The day trader boys are looking at the volume, looking at the market movement, because many things make a share to go up. Remember, I gave you the story of helium.
Yeah.
If you just pick the news, let's just look at the news. Let's pick random news. Let me go to random news. Let me show you how to trade, right? Let's pick news. I go to my business news. That's why most apps will give you news, because news is your trading signal. Let's look for something. Let's look. Trump claims total. What's he saying? This is we've done Hormuz. I want something different than Hormuz. Surrounded by medical team. I want something different. Ooh, okay. Brent crude. I want something that is not Iraq war, all this stuff. So there's something here about Avis stock. So okay, airlines. So like we're seeing airlines, right? And then we're seeing that airlines are struggling today. Why? Because airlines are essentially a proxy on aviation fuel. So if you are buying an airline stock, you are buying aviation fuel. If aviation fuel is cheap, they make money. If it's expensive, they lose money. Where do you think, if I ask you, where do you think oil would be in 2 weeks? Do you think it's going to go up or down? What do you think?
It's going to go down.
Without news?
We don't know. But I'm asking you, what's your take? Do you think it's going to go up or down?
Are you saying with considering the news that you just read?
Yeah, I mean, with anything, just you don't know. Like, what do you think? Anything's going to go? Oil price is going to go up or down in 2 weeks' time? Is it going to go up? Is it going to come down? What do you think?
I don't know. For me, I still have to look at you have to look at the signals.
There's no signal. It's a bet. There's no signal for this. You are basically saying it's a binary bet. Oil price today is about 100, right? You are saying that I'm asking you, will oil be 120 or will it be 90? What will it be? That's what I'm asking you. Will oil be 120 or will it be 90? It's only one answer. It can be 120, it can be 90. It can be both. So it's a simple question. Is it going to be 120 or 90? If you think oil is going to be 120 in 2 weeks, then you want to short Delta Air. You want to short Delta Air because they can't make money with expensive aviation fuel. So you can short Delta. You can.
But Mr. Kalu, before you can say oil will be 120 in 2 weeks or it will be 90 in 2 weeks, something has to back up your.
I don't. That's what I'm telling you. I don't know. That's what I'm telling you. You're making a binary bet. You have to make a binary bet because you don't know. I don't know. Nobody knows. So you have to ask yourself, what do you think? What does your gut tell you? What does the data tell you? What does the trend tell you? Because you don't know. They can blow up a tanker tomorrow. You don't know. So the only way you can do this is to take a bet. You can bet on both sides. You can buy an option to say, I buy an look. So Delta Air today is about 68. I can buy an option, a call option to buy Delta at 68, which means that if the price of Delta goes up to 90, I buy at 68. I make a profit. Or I can buy a put option to sell Delta today at 50. You see? So I will sell Delta today at 68, and I hope the price will go down. The price goes down, I buy it back and make a profit. That's all I can do. I don't know tomorrow. I don't know. So you can take it. You can take a bet on the upside. You can take a bet on the downside. You can do options to magnify that debt. You can cover your call. You can say, I'm going to take a call on Delta to buy it at say 70, at say 68. And I'll simultaneously go and do a put to sell it at say 65. And I make a spread. So I don't make, so if it goes up or down, I'm protected. This is the point I'm making. Nobody knows. There's no signal. Volume is happening already. So volume today is happening right now. But you don't make money right now. You make money by taking a position on a future occurrence. So if you say you want to make money, you're going to take your money and say, I'm going to buy Delta call at 65, and you wait. If that call happens, boom, you make money. But if you're buying now, you don't know. So trading is there. They are scalping. They are making 1 naira, not 1 naira, 1 kobo, 2 kobo, 3 kobo on arbitrage. The difference between the price of, say, Airtel in Nigeria and UK. I can look at UK market on one screen, look at Nigerian market on one screen. If Nigerian inflation goes up, I can sell my Airtel in Nigeria and buy it in the UK, and do the same thing in UK and Nigeria and make a spread on those two. It won't be a lot, but that's trading. That's where your volume comes in. Or you can say, I don't care about all this stuff. I don't want to trade. I'm just going to buy Delta. It's a good company. It controls Atlanta. It's going to keep on growing as air travel grows up. I'm just going to buy Delta and go to sleep. I don't care about spreads. That's what I'm telling you. So you choose what you want to do. If you're a trader, you want to read this chart like I'm doing right now. If not, you want to buy a good stock and you invest in it and you close your books. End of story.
Okay.
All right, friend.
All right.
Thank you, guys. All right. Thank you guys for hanging out with me. It's a very, very quick one. We'll spend about an hour. I really appreciate you guys for doing that. I'll see you guys on Sunday. We'll clean the slides up, get it all ready for you folks, and then we'll do a better one on Sunday. You guys can come back and we'll ask more questions. Yeah? Fantastic. Thank you so much, guys. Appreciate you guys. You guys have a good one. Thank you. All right, yeah. YouTube guys. Kemi, thank you. Bobby, thank you. Olumu Yuwa, thank you. Who else? Yep. You guys, I appreciate